Consumer sentiment fell sharply in the February month, following on from a mini rally over the December-January period. That 8% gain has basically evaporated. What holiday season cheer we had through December-January has long gone. At 78.5, the sentiment index is back near the 78 low we saw in November. The key drivers look to have been a disappointing Q4 CPI and the RBA's 25 basis point rate hike alongside the Governor Lowe's more hawkish rhetoric. In fact, survey responses over the survey week show a very clear turnaround before and after the RBA decision. Respondents surveyed post-RBA had an index read of just 74.8. Those surveyed beforehand had an index read of 83.5. Given that the 25 basis point move was widely expected, that really points to the very hawkish rhetoric that we saw from the Governor's decision statement and the statement of monetary policy as the things that have hit sentiment. In terms of the components, it was assessments of family finances versus a year ago and whether now is a good time to buy a major household item that really drove the decline, down 8% and 10% respectively, both to very weak levels that we only really see during the depths of recession, or only see weaker reads during the depths of recession. It's a clear warning that spending looks poised to slow abruptly. Spending still hasn't quite done that yet. We've had 8 months of weak sentiment reads, and spending has held up reasonably well. From the RBA's point of view, with inflation running red hot, we think they'll continue to raise rates with a 25 basis point move in March and a final 25 basis point move in May. The warning is clearly there, though. For the RBA, it'll be a case of watching what I do, not what I say, when it comes to the consumer. We think in the next few months their spending activity will fall more in line with these very weak sentiment reads, and the case will start to build for an eventual pause in policy. But so far, it's really a very weak sentiment situation. It hasn't quite transpired to spending. Other aspects of the survey also mostly downbeat. Housing-related responses, again, lodged at low levels, although sentiment around price expectations is still moderate rather than particularly weak. And the labour market is still the area where consumers are still relatively confident, although a 10% deterioration in the February month suggests that may be starting to turn, and that may be another key factor when it comes to spending decisions. So for now, consumer sentiment continuing its very weak read. That Christmas, New Year mini rally in sentiment has unwound completely in February, and we're back to those recessionary lows around 78.